I think it's going to be the first real global cannabis brand.
Our sales have gone like a fucking hockey stick.
Nicotine's been crushing it, and like everybody is smoking vapes now. The goal is to make a couple $1 billion in cannabis, and then I want to be president.
Dan Bilzerian has always been a controversial person. He's seen a meteoric rise with more than 40 million followers across his main social media platforms.
Just on 1 week in Instagram, I reached almost 500 million people. I think
A better engagement than fucking Nike. It's like got, millions and millions of views on their posts.
And the success of his own business, Ignite International Brands, which at its peak was trading at a market capitalization of more than 750 million US dollars. And so everything seemed to be going great.
As a longtime stoner, what do you think about the industry and how it's blowing up in today's world?
I mean, I'm excited about it. I mean, it's going to be one of the best products in the industry.
But ever since the peak, the value of the stock dropped below 170 million US dollars before returning to private ownership. And arguably, the decline of the stock coincided with the downfall of Dan Bilzerian's reputation and the exposure of his fake persona, which resulted in widespread online criticism and mockery. Now in this video, I'll take a slightly different perspective on the rise and downfall of Dan Bilzerian. I will show you how the greatest investor of all time, Warren Buffett, would have avoided this negative 80% stock disaster, as there were 3 clear warning signs that every proficient investor could have spotted. And I will include 1 bonus red flag towards the end of the video. So without further ado, let's get started. Alright, so just to give you some more context, Ignite International was founded by internet celebrity and controversial figure Dan Bilzerian in 2018. And to this day, the Canada-based company that is headquartered in Toronto, Canada, sells everything from nicotine products to energy drinks and apparel. In January 2019, the company became a publicly traded stock under the BILZ ticker. On August 6, 2019, the stock of Ignite International Brands was trading at a share price of $2.64 and eventually announced going private again at a share price of 62 cents, a decline of more than 80% over a 3-year period. So let's take a brief look at 3 red flags that were right there right from the start, and that I think any investor who knows what he or she is doing would have been able to spot. Here's red flag number 1. In 2012, Warren Buffett's longtime business partner Charlie Munger, who unfortunately passed away recently, talked to the BBC and outlined the 4 main criteria he and Buffett are looking for when evaluating stock ideas.
We have to deal in things that we're capable of understanding. And then, once we're over that filter, we have to have a business with some intrinsic characteristics that give it a durable competitive advantage. And then, of course, we would vastly prefer a management in place with a lot of integrity and talent.
Now, while I do believe that Buffett would have been able to understand the business model of Ignite International Brands, which is pretty straightforward. It's consumer-facing, somewhat recurring revenues, brand power plays a role, even though the marijuana industry it was operating in early on would have likely turned him off, as even Dan Bilzerian later realized how many restrictions he and his company had to overcome.
The issue is coming out of the gates, we picked the wrong fucking products. It's marijuana, which we could only sell in California or, California and Canada. Like, we had very limited spots where we could do it. And
however, even though Buffett would have been able to understand the business model of Bilzerian's company, he most certainly would have come to the conclusion that Ignite is not run by a quote-unquote management with integrity and talent. The 3rd checklist item presented by Charlie Munger. I would argue that it doesn't take a doctor's degree in human psychology to realize that Bilzerian is a fraud. All you need to do is look at his social media presence and use some common sense, and most will realize that this is not a business owner you would want to partner with and trust your money with. But on top of the way Dan Bilzerian presents himself in public, which to be fair is more of a qualitative assessment. There's also some clear evidence that you can find once you start digging into the public filings of the company. Buffett in particular is known for his diligent research and focus on annual reports. He's quoted saying, "I read annual reports of the company I'm looking at, and I read the annual reports of the competitors. That is the main source of material." So there's no doubt in my mind that Buffett would have started by reading all the publicly available material from Ignite Brands, starting with the annual and quarterly reports of Bilzerian's company. And guess what? If you take a look at the related party transactions included in the 2019 annual report, there are a couple of points that seem at least dubious. Firstly, it seems weird that Ignite is picking up the check for employees of another then Bilzerian company, Blitz NV. Then there's a lease payment to another company owned by Bilzerian. Next, there are 1.3 million in business expenses incurred by then Bilzerian and around $360,000 in travel expenses. And lastly, there's a promissory note of 4.1 million, including $230,000 in interest. As an investor, if you encounter such things, you need to start raising your eyebrows and give the stock a pass. And again, this was the 2019 report. Those suspicions, the hunch that many had that Bilzerian was using his company's funds and investors' money as a piggy bank to finance his lavish lifestyle, was later actually proven when former Ignite president Curtis Havenan was fired and subsequently went on a whistleblower campaign, shedding some light into the black box of then Bilzerian's finances. Havenan claimed that he called Bilzerian on expenses that included $15,000 for a ping pong table, $40,000 for a rock climbing wall, and $130,000 on a Bahamian photo shoot. Moreover, quote-unquote, a June report by the company's auditors flagged expenses that were unusually large or appeared to be personal in nature, including an Ignite payment of 50% of €703,000 for yacht rental, £402,000 for a 2-night stay in London, and Instacart deliveries of razors, trash bags, and laundry detergent, according to the lawsuit. This seems highly unethical to me, and I'm sure Buffett would think the same way. But Bilzerian himself seems to disagree.
The yacht, I mean, man, that was like branding. I mean, we had the goat skull front and center on a 300-foot yacht, and I think the yacht rental was like over $1 million, and I, paid for like, I want to say 600-ish of it. I mean, Ignite paid for 400.
In 2022, the SEC even announced it was investigating potential accounting fraud of the company. But we'll stop here and move on to red flag number 2. Another investing rule Warren Buffett lives by is to focus on companies that produce profits. A high level of profitability is a good indicator of a company having good and efficient business processes in place, having pricing power, good management execution, and successful expense control mechanisms. However, Ignite is missing all of those. If we look at the last 12-month numbers of Ignite, we can see that the company was, for the most part of its public history, severely unprofitable on both a free cash flow and an earnings basis. In fact, in the years 2018 to 2021, the company was burning an aggregate of almost $100 million. Bilzerian again doesn't think Ignite's lack of profitability was a problem and likes to compare his tiny company to the tech behemoth Uber.
I think it's one of those things where I think also people don't really understand too much about business, and they look at it like, oh my God, the company lost $50 million in a year, and it's like, well, Uber lost $5 billion in a quarter. You know what I mean? Like, some companies lose money. Most companies lose money when they start. The headlines were like, Dan Bilzerian was faking everything. And it's like, I've been doing this for 10 years. Like, I was famous for being rich. Like,
and I get what he's saying. Obviously, businesses will go through different stages of the corporate life cycle, but nonetheless, Buffett would pick a profitable company over an unprofitable one every day of the week. And there are plenty of free cash flow generative companies to choose from in public markets. Red flag number 3, that's dilution. If a company is excessively diluting shareholders, that's usually a red flag for me, and I simply move on. And I know for a fact Buffett would too. When a publicly traded company issues additional shares of stock, this will reduce the value of already existing shares, as the proportional ownership of the current owners will decline. It is a risk that investors must be aware of, and when we look at the level of dilution at Ignite International Brands, we can see that shareholders were heavily diluted over time. Between 2018 and 2022, the total number of shares outstanding is up by a factor of 3x. I recently read a great blog post on the impact of dilution. The author argued that, quote-unquote, anybody owning a business over a multi-year period who expects to compound their money should be paying attention to dilution. The really simple way to think about dilution is, what is the growth in market cap required for the stock price to stay constant over a 5-year period at differing levels of dilution? And then he shared this table to sum it up. Basically, Bilzerian's company was diluting shareholders at a rate of roughly 25% annually, which would mean that the market cap needed to grow in value by around 200% just to keep the value of the old shares constant. Now, red flag number 4 is related to the valuation of Bilzerian's stock.
Finally, no matter how wonderful it is, it's not worth an infinite price. So we have to have a price that makes sense and gives a margin of safety considering the natural vicissitudes of life.
I've previously talked about how Buffett screens for investing ideas. In summary, the stocks Buffett is interested in need to trade below 15 times next year's earnings per share. You need to be 90% sure the business will have higher earnings per share in 5 years. And finally, there should be at least a 50-50 chance of the business compounding at 7% a year. Now, if we just look at the valuation of Ignite over time, and we'll have to focus on revenue multiples here due to the lack of profitability, we can see that at its IPO, Ignite was trading at a revenue multiple north of 50. That multiple then skyrocketed to over 100, and for the most part of its public history, you could only acquire a stake in Dan Bilzerian's company if you were willing to pay more than 15 times the annual revenue generated by the business. There's no way Buffett would have ever paid that much for Ignite International brands, even if you would have liked the management team and the business model. All right, let me know what other things Buffett would have potentially disliked about Ignite International brands, and then watch one of my other videos next. Take care.